Hello everyone, I'm here with Howard Linden of StockTwits. We're going to talk about some hot stocks that are moving and that people on StockTwits are tweeting about. So let's start with the shoe sector. I never thought that would be one that we would be starting with, but Crocs, there we go. Crocs, Decker, the maker of Uggs, and Skechers, all getting hit pretty hard lately. What's going on, Howard? Last I heard, Imelda Marcos was still among the living.
Well, socks could be back. I think the issue with Crocs, they've had great runs. Crocs' new product, phenomenal product. I think, the stocks moved generally ahead of this news. And, they've had a fantastic run. Skechers, Deck, they had great runs through the summer. The momentum may be a little bit waning, those rolly, bouncy shoes.
Yep.
So, again, it's a tricky market right now, and I just think they just came to some selling right in the last few days.
Right. Do you think that maybe some short sellers in particular might be targeting those companies? Obviously, a few of them have some pretty high PE ratios, and they are, as you mentioned, pretty classic momentum plays.
Classic momentum plays. They've been broken before. I just think the shorts had been in these stocks, and that was part of the run. And I think it's just some people taking some money off the table. I mean, these stocks have had great runs.
So that Croc there that you were showing us before, that's not like the old Get Smart days. Maybe we'll have Apple and Crocs partner up on an iPhone. There we go. That'd be awesome. Netflix, another hot momentum stock that can seem to do no wrong. Shorts have been, harping on how expensive this stock might be for a while now, but to no avail. What do you think of Netflix?
Well, momentum is a strange animal. I'm a momentum person because it's just a style that that I like. In the public market, I like to own the most expensive stocks because they generally are the most liquid. I think where Netflix confounds people is that historically, high growth stocks and institutionally owned stocks, don't really trade on PE. Netflix will come down with the market, obviously, but until Netflix does something unexpected, this is a leading stock. I expect, personally, I was a seller of some stock yesterday on the stream, that I think this is a great time for Netflix to either raise some money in a secondary or do something unexpected. This is a great time with their stock in the 140s to raise a lot of money to go pay for some of those content deals that they're doing. So, if you've owned the stock for a while, I don't care what anybody says, you should be taking some money off the table here.
Right. You raised an interesting point about them doing a secondary. Do you think that makes more sense than, say, a debt offering? We've seen a lot of investment-grade debt deals this week. I think it's the most active week since May of 2008, and it's a short week, too.
Great point. I wasn't thinking, actually, because interest rates so low, could be much cheaper for them to do a debt offering. Exactly. It just depends how it just depends on their style at a board level. What they want to do with their balance sheet. But I just can't predict that one. But I feel as if the company, from a financial issue, should do something right now.